All right, everybody, how are you doing today? Cobra back again for the, as promised, lengthy high time frame Bitcoin outlook. I'm going to be using, like I mentioned, multiple kinds of different analysis here. I want to go over price action. I want to go over Fibs, Elliott-Wave theory, trend lines, channels, patterns, a whole bunch of stuff today. So lots of good stuff in this video. It is going to be a little on the longer side, so I'm going to try and make it quick and not dabble on or anything like that. So without further ado, let's go ahead and get into the charts. Today is Monday. It is May 18th here, about 7:30 on the East Coast, so it's pretty early. Let's go ahead and switch over to the chart real quick. All right, so the very first thing that I want to look at, and most of this I'm going to stick to the weekly and the daily time frame. The first thing that I want to look at is just the price action, right? So obviously we've got all this movement. This is nothing new to anybody. We hit our high at about 14K, and it's been a pretty much a slow grind down. We had another pop to retest the 10,500 level. We did it once here, we retested it here, it failed, we broke down, we retested it here again back in October, and then we retested it again up here in February, and then we had not minor capitulation, but we had market capitulation, which is even more dangerous than minor capitulation. Had a huge couple weeks of minor capitulation here, almost a full month from when we topped. And then we were slow grinding our way up going into the halving. And now it is post-halving, and it looks like the price action is starting to slow down just a little bit. The week before, we had just really big ranges here, all the way up to breaking 10,000 and all the way down as low as 8,000. And then the week after the halving, we had this candle. This candle just opened up yesterday, and so far, not very much price movement. It looks like we're kind of getting like a shooting star here, which would be a bearish candle formation considering that we're topping here. So what I was really hoping was going to happen was that we were going to end up wicking up here and testing 10,500 and hopefully getting a close above these 10,150, 10,200 levels to start pushing up higher. Now, we've had obviously a lot more volume coming into the market through all of this, and even still, last week, you know, the weeks going into the halving and the week of the halving, we had a lot of volume here, and obviously this week just started, so there isn't too much volume being recorded as of yet. So if we take a look at the price action on a daily chart, we can see that we had this little retrace here. It was actually about $2,000 from 10,000 all the way down to about 8,000. That's where we had that big drop. And ever since then, we've been kind of working our way back up. Now, the concern here for a lot of people, and this would go towards the bearish bias, is that we're actually making a lower high here, which would be bearish. Some people are calling this a double top. It's not technically a double top because we haven't actually double tap the 10,100 zone yet. So that's going to be the start of what I'm looking at in terms of this whole analysis and stuff like that. But what I wanted to get into first, and I've got my notes down here. The first thing that I want to talk about is how the monetary system, not only in the United States, but the global monetary system is, for the most part, it's pretty much failing, right? All the countries around the world are starting to print money. They're turning the printing presses on. The Federal Reserve in the United States, they're buying bank bonds and government issued treasuries and stuff like that. And in general, it's basically just not good. That's how the Federal Reserve comes up with more money. And then obviously they also print more physical money and they distribute that to the Federal Reserve banks. Not every single dollar is backed by a physical gold or metal coin or diamonds or something like that. Well, when enough countries end up printing enough money, it basically sends the entire global economy into hyperinflation. When you hear the word bailout, what that means is that the Federal Reserve is issuing all of this money to those banks. And what happens when the banks get bailed out? Well, in turn, that trickles down to us, right? You know, when you own a house and you have a mortgage on a house, when you go and you get a loan for a car and stuff, those are all through the banks, right? What would end up having to happen if the banks defaulted on those loans and the Fed didn't print money and bail out the banks is that the banks would be coming for your house, they would be coming for your cars, and they would be taking back all of those assets because they would be having to pay off and cover the debt that the banks have incurred by lending out money that they don't physically have. As those big infrastructures start getting bailed out, first of all, it's not a bailout, it's a loan. He knows that he's going to get the money back. Let's get real here. Trump is a businessman. He's not about to just shell out $6 trillion unless it's a loan and there's interest and he knows that it's going to get paid back to the country. Same thing with these Trump checks and stuff like that. At the end of the day, the IRS claims that, you don't have to pay taxes on it and, it's not a loan, you don't have to pay it back. But at the end of the day, while that may be quote unquote true, you're still paying taxes on it because what do you do with $1,200, right? You spend it. So when you spend that money, it's still getting collected as tax. So that goes to the state first, it goes to the local county governments in the United States, at least, where you purchase something. So the county gets their share, and in turn, the state gets their share. Well, at the end of every month, the states also end up paying taxes to the federal government as well. So the federal government is getting all of this money back. If the government is physically issuing every United States citizen a $1,200 check, that means that people are broke. I believe the numbers for last week, it was something like 35 million people so far in the United States alone have filed for unemployment. So I can't even imagine what the global numbers for unemployment is around the world. And that is extremely important. So when you see people on Twitter that say, oh, retail investors drive the price of Bitcoin. No, they fucking don't. Whoever says that has no idea what they're talking about in terms of global economics or anything like that. If there's 35 million people out of work, there's no way in hell that people are putting their money into Bitcoin, right? They're broke. They've got more important things to pay for. All through pretty much this whole COVID thing, I mean, when you look at the chart, the price has been going up. Well, why is that? Well, because people that know about Bitcoin, especially in the United States and in other countries, they have been turning some, if not all, of the money that their governments are printing and putting it into a more stable asset. Obviously, Bitcoin is backed by math. It's backed by algorithms. Some people are really starting to wake up to the fact that this is what the governments are doing, that the fiat money is basically just monopoly money and it's completely worthless. And you've got people turning to other solid assets that are scarce, that they know are going to hold value very strongly over time and do nothing but increase for the most part over time. Diamonds, platinum, gold, palladium, copper, silver, all of that good stuff too, right? Shifting from the whole economic thing to more of a Bitcoin thing is there's a lot of websites that track short orders to long orders and stuff like that. But there's not very many sites that track the actual ghost orders, which are orders that are hidden from the order books, which is what whales usually do so that retail investors can't tell where these big buy and sell walls are. And one of the things that happened just a couple days ago, there was a 2,700 Bitcoin spot order that was covered on Bitfinex. And that's a really big deal. 2,700 Bitcoin, that amounts to something like 26 or $27 million. The average fill for that with the spread and everything on Bitfinex, the average fill was about $9,700. That's pretty much where the price is right now. We're sitting at, looking at the chart here, we're sitting at about 96.36. So that in and of itself is a pretty big deal for that kind of amount to be covered. Now, we don't know if this is an individual person that's a massive whale. We don't know if this is an institutional buyer or something like that. But That is one thing to be aware of. So this is on blockchain.com. This is our hash rate, right? When the whole COVID thing started happening, I mean, our hash rate was going up and up and up, going into the halving. Obviously, this was when we were seeing that huge influx in price, right? And then we had that dip here. We kept going up, and now we're dipping down again. Since May 7th, we've been doing nothing but having this sharp fall off. And honestly, by the end of the week, being at where we're at now, I would expect this probably by the end of the week, if not next week or sooner, to be dropping below 100. So normally when that happens, that's a signal for miners to start taking profits. So this makes sense, right? So over the last 30 days, the hash rate has been going down. And obviously, since there's less hash rate, that means that the transaction fees have been going up. So this also makes sense and correlates with the actual hash rate, right? The total hash rate coming down, the miner revenue coming down because there's less hash rate. It was up at, its peak was about 18.6 on May 9th, and now it's come all the way down to 11.2. So this is in millions of USD. So that's pretty much cutting in half. Obviously, that makes sense because we just had the halving, so it's cut in half. I think now that we're starting to see miners, taking profits, some miners are going out of business or they're operating at a negative. They're starting to take profits. That's going to start having a real effect here on the price soon. So everyone coming into the halving was super bullish. They were all buying the rumor, and then they sold the news during the halving. Then we kind of popped back up here for a little bit. I think what's going to be happening is over the next probably maybe 30 or 60 days, I think we might end up seeing a slow grind down. This has happened time and time again. I'm not going to go over, years worth of analysis of previous halvings and stuff. Going into the halving, I'm sure that you guys have seen this. Going into the halving, you normally see a price boost. At the halving or right after, within a week or two, you see the price make a sharp decrease. And then over, the next month or two, it slowly starts grinding back up. I don't expect this time to be any different. I personally think that, we've topped here. We had this little Vegas wave. Let's go over to the chart. We topped here. We had this Vegas wave. We had a sharp capitulation move. And then, this was pretty much at the halving, right? The halving was on the 11th. So we had a sharp capitulation move coming into the actual halving, and now we kind of restabilized. It looks like we're going to see some consolidation and then maybe start slow grinding down. So I know that this is on Bybit and it doesn't have the full history of Bitcoin. The reason why is because I was setting up all of these charts last night to do all of this, and there would have been so much stuff on some of these charts. I just had to separate it. So I'm just using the Bybit chart just real quickly to show support and resistance levels and stuff like that. We've been in this major descending channel, right? Everybody's been watching this for a long time, and I know what you're thinking. Oh, Cobra, what the hell? This line doesn't tap. It doesn't tap here, and what the hell? Your channel is all weird or whatever. Honestly, channels and trend lines, they're subjective, right? I mean, everybody draws these a little differently. Some people use wicks, some people use candle bodies. Whichever way that you do it is completely fine. Just make sure that you do it the same every single time. That way you're not forcing a bias and trying to make the chart do something that you want it to do. The chart and the market and the price action is never going to do what you want it to do. The market's going to do what it wants to do, and you just have to accommodate that. You just have to plan for it, try to plan for it, try to plan ahead, and manage your risk as best as possible when it comes to trading. But this is the channel, the way that I have it drawn. And the reason why is because this has 3 touches when it's drawn like this. So I always try to draw from the candle wicks. Normally with all of my analysis, that's how I do it. We've got 1 touch here, 2 touch here, 3 touch here on the top. On the bottom, we've got 1, 2, 3. This is actually 4 and 5 and 6 if you really want to get technical about it. But 3 touches on the bottom, 3 touches on the top. So we've got our 2019 yearly low down here at 3,069. We've got our 2020 yearly low at 3,730. Then if we look at this daily chart, we can see here that this is where our monthly high is and our monthly low is. So we've got our monthly low at about 8,000. about 8,100, and then we've got our monthly high at about 10,100. So these levels totally make sense. You know, we're in a $2,000 range here, and then this box that I have here is kind of like the no man's land. It's kind of like the midpoint of this range, right? So this is kind of a solid area of where bulls and bears are fighting the most in terms of where our current range is between our monthly high and low. So what I'm expecting here, and this actually already happened, we broke out and we weren't able to hold above 10K. We fell back into the channel for the sell-off right before the halving, and then we started coming back out, right? We didn't retest or sweep our monthly highs, which is kind of a bearish sign, right? Like we didn't double tap it or anything like that, but we did come down and we did do a bearish retest of the top of our main descending parallel channel here. So we've been managing to stay above that. However, on this daily time frame, we're starting to get, and obviously there's 12 hours left here for this daily candle, so this is halfway. As of right now, it looks like we're kind of trying to form a spinning top or some kind of a doji here. So this would signal to me in terms of candlestick analysis and price action analysis and stuff like that, this would signal to me that we're looking pretty toppy here, right? We had just a slightly bearish engulfing candle. Then we had if you zoom in here on this candle, we had a bearish hammer. Then we had a bullish candle with a high wick. So showing that there's a lot of selling pressure up here, right? And so far for today's daily candle, we tried to test all the way up here at almost 10K again. We're getting heavily rejected. There's a lot of sell pressure up here in all of these levels between 9,700 and about 9,900. So in that $200 range, there's a lot of selling pressure. There's a lot of supply up here, and it's starting to push the price back down. When you look at volume on this too, on the daily chart, what you can see is and I'm only looking from this candle on, so from the 7th until now, is you can see that this volume has been drastically dropping off, right? So normally when we see a big drop off in volume like this, normally it means that the bulls are getting exhausted. There's really not too many retail investors coming into the market. The first thing that I would expect here on a daily chart, just in terms of talking about price action and candlesticks, is I would expect this candle to close, and I would expect probably to see another retest of this low into our mid-range here of about 9,000. We haven't seen a retest of the actual 9,000 levels, so the first thing that I would expect is to retest somewhere inside this box, you know, the top of the trend line or this big box of our mid-range of our monthly highs and lows, right? So I'd like to see a retest of this box and probably end up going sideways for a little bit. Now, what we have to make sure though is that the bulls are able to keep our price action from falling back into this descending channel. Every time that you fall back into a channel that you broke out of, it shows a lot of weakness in terms of demand for price. And normally that's due to lower volume. So the volume is definitely something I'm keeping an eye on. It would be healthy at the end of the day to sweep these monthly lows before, you know, breaking out of this channel again and then trying to sweep our 2020 yearly high, which normally ends up happening. Normally you end up sweeping the lows. You make a defined range first, right? So we came up, we found our top, we found a low, and that's defining our monthly range here so far. So normally what happens before the price of anything will continue is you end up sweeping the highs or lows, one or the other, before continuing the move in that direction, unless there's not enough volume coming into the market and the price ends up breaking down. So what I would expect to continue upwards would be a sweep of these monthly lows and then a continuation upwards to sweep this yearly high. Obviously, after that, we would probably see some kind of retrace, you know, maybe even back down to where we are now, you know, about 92, 9,300, and then continue our way upwards. What's happening right now is I saw this on the chart yesterday, and I traded this. I traded the long here, and then I shorted. I actually got out of my short position last night before I went to sleep, and it looks like the price is coming down pretty significantly here on the open of this 4-hour candle. But so I was really bullish here, and I thought that we were going to close above this trend line. We ended up not doing that, and I ended up closing my long position out right around the top of this candle, and then it started coming back down. So with cup and handles, this is starting to get into patterns now. On the 4-hour chart, patterns like this are normally pretty reliable, but at the end of the day, whether you're trading Bitcoin or you're trading Forex, patterns normally only have about a 70% success rate, right? So I'm talking bull and bear pennants, talking bear and bull flags, I'm talking cup and handles, head and shoulders, inverse head and shoulders, Adam and Eve patterns, all of that stuff. When you've got a bull flag, you've got something that looks like this. When you've got a bear flag, you've got something that looks this, right? So normally, these are what your flags look like. And what's interesting is that these can also turn very quickly into head and shoulders. So you can come into the uptrend, you see a top retracement, you see a higher high, a retracement down to this neckline. This is called the neckline here. And then you see another pop in price, but it doesn't, basically sweeps the previous lower high over here. You sweep the previous lower high, and then you continue back down. It normally would break back down. You know, your price action, and then you've got a sharp V wave, right? So you've got a sharp Vegas wave, and then you get something that looks like this. So you've got your Adam, you've got your Eve, and then you would basically, you know, normally you end up breaking down from this, or at least in Bitcoin, that's what I see. Then you've got your pennants, right? So that's a continuation pattern. And then you've got your bear pennant, which looks something like that. Those are continuation patterns. Just wanted to explain that real quick. So the thing about a cup and handle pattern is that there's very clearly defined, in terms of Fibonacci, there's very clear breakdown area. There's a very clear invalidation zone, and that's normally the 0.5 fib level. So if you take your Fibonacci tool and you draw from the low of your cup to the high of your cup, which was actually previously here, this is where I drew it from because these candles did not exist yet. So this was our low, this was our high, and we were starting to form this. So I drew this, you know, this little channel here coming down to this 0.5 fib and marked this on the chart. We ended up wicking below this. This immediately invalidated it. So we had, it looked like we had some algo trading here. Algos pulled it down to 382. We hit that. Algos pulled it back up. And algos ended up pulling it back down. You know, a lot of distribution came into the market, a lot of people taking profits up here, and it pushed the price back down. We tapped and surpassed this 0.5 fib level. It invalidated the cup and handle pattern, and now it looks like this is starting to break down. Now, normally a cup and handle would continue upwards. Normally you see something happen where this is the handle, and then you continue upwards like this. That ended up not happening, obviously, and now the price is starting to break down. So this is a failed cup and handle pattern, but I did want to go into that. That is a chart that I had posted on Twitter with that pattern there. I saw a lot of people posting a lot of different things about this, but what pretty much ended up happening, what I saw is that pattern just stuck out at me because I like trading patterns, right? I like trading breakouts of patterns. In terms of trend analysis, price action and stuff, that's pretty much what I wanted to get into. Now, in terms of my outlook, obviously this video is supposed to be on my outlook of where I think Bitcoin is going to go, right? Well, with all of the hash rate kind of dumping and, you know, we're seeing failed, we're starting to see failed patterns on the daily time frame. Our volume is starting to drop off. We're starting to get pretty weak candles here and more bearish candles up here on the top on our weekly chart. We weren't able to sweep our monthly highs here. In terms of Fibonacci from 2018 and our high in 2019, and we retraced perfectly and used this as very solid support, and we tapped this this 618 golden pocket perfectly, right? And there's a lot of times through Bitcoin's history, through all of these big swings that we've had, that we've done that multiple times. So if we take this high to this low, you can see that we actually just did that again here. And this is something that I've been keeping a close eye on. This is why I was expecting Bitcoin to kind of get rejected here. Is the 618, that's a known algo target, that's a known area of major support and resistance. And now that the picture has completed itself more fully in terms of price action and we've got more data here, you can see just how long from our high up here at about 14,000 to our low down here at about 3,800 in the past year and a half, whatever, how long this level has acted as support and resistance. All through all of this price action, you can see how perfectly all of this price action touches these levels, especially with this 0.5 level too. So taking a look at these fib relationships here, you know, we've got our overall trend here of we tapped our 618, right? So if we take this high to our low, and this would be looking for a retracement, right? We came all the way up and we tested our 886. Also, pretty common algo target. The 886, the 786, the 382, those are, and the 113, those levels I have here, and you guys can copy these levels down if you want. The reason why I have these levels here is because I try to find harmonic patterns, which I said I was going to get into on this video as well, but one, I'm probably not going to have the time for it, and two, I found myself last night trying to force harmonic patterns to make my harmonic patterns. I was trying to force the harmonic patterns basically, and it wasn't, it was kind of messed up because I was basically going very biased with that. So there aren't really any actual like longer term harmonic patterns. Normally you're going to find those on Forex a lot, like on the hourly chart and on the 4-hour chart and sometimes on the daily chart. But with Bitcoin, with how volatile it is and how much fundamentals go into Bitcoin with in terms of affecting the price action, I found myself trying to force patterns, and it was kind of affecting my bias. So I decided not to do that. And I don't want to force patterns and try and say that something's there when deep down I know that it's not really there, and I was just trying to force the pattern to happen. So I'm not really going to get into that on this video, but in terms of Fibonacci stuff, if we now pull from this low to our most recent high, this is what we have. Oops, what we have is our most recent high. When you're drawing these, by the way, always draw from left to right. Like never go backwards. Like you're measuring, go from left to right like you're reading. Don't go from right to left like back here for some reason. Don't do that. It doesn't make sense. It's not the correct way to draw them. And also, no matter what you do, you're always going left to right. So whether that's from high to low or low to high, always make sure that it's from left to right. And always make sure you can use wicks or bodies for these as well. Just always make sure that you're using the same thing every time. I tend to use the wicks. So anyway, so if we draw from this low to this high, right? As I mentioned, there's a lot of times where the 618 is definitely a major algo target. That's normally what we end up seeing. Does it have to happen? No, but normally we end up seeing between 0.5 and 618. And right now, off of this swing, that would land us somewhere in the range of about 6,600. A lot of people are saying that 6,600 is a farce. There's no way that it's going to happen. But, you know, they also said that we would never see, you know, numbers in the 3,000s again. And look at what we had here. Another failed cup and handle that ended up breaking down. And we capitulated and we saw all the way down to 3,800. So, never say never. It can definitely happen. If it happened once and it's happened again, it's happened again and again and again, you know, it can definitely happen here too, and we can definitely hit. I definitely think that that's still a possibility. I definitely think it's on the table, and getting into some of my other analysis here in a couple minutes with Elliott-Wave theory and stuff like that that I promised I would get into. I'll explain why, because the count that I have for this overall daily and weekly chart on Bitcoin, it is bearish. Normally a trend reversal in terms of higher lows and higher highs, normally you have to have two of each. So you have to have two higher highs and two higher lows in a row back to back in between retracements in order for there to be a confirmed trend change, right? And we haven't seen that. So I would expect some other kind of move here where we retest lows again. Anywhere I would be comfortable with anywhere between 6,000, even all the way up as high as like 7,400. And I think that would be sufficient. The 382 is a pretty solid retracement zone, but normally Bitcoin, when it retraces, it's lower liquidity. There's a lot of panic selling that's going on. There's a lot of manipulation because it's lower liquidity. And you end up normally seeing a violent, something like this. You end up seeing a very fast, very violent, turn in price action. Bitcoin and how it likes to hit, certain levels like that. It just happens time and time again, right? This high to this low, boom, we hit 618. This high, this low, boom, we hit 618, and then we retraced. It just happens over and over and over again. Coming in to something like this, seeing such a big swing move like this from back in March, right before my birthday, all the way up until right before the halving, I would definitely expect to see some kind of momentum downwards to start sweeping some of these other lows, right? Like we haven't swept this low yet, right? We haven't reswept this and retested this major area of support and resistance yet. We haven't swept these lows either from our first leg up. These are three key levels in terms of price action that I'm really watching. So these levels come out to about 65.50 for the low, 73.75 for the mid-range, and then 8,100. So basically 8,000, 7,500, and 6,500. Those are basically the three key areas that I would like to get swept and see swept before we continue up. Go back to our other chart here. Where does that line up with our monthly highs and lows, right? So the first level lines up with the monthly low. So that would be definitely the first key area that I would be looking to sweep. And then in terms of support and resistance, I pretty much have those same levels already marked on my other chart with levels of support and resistance. This one's a lot lower, but this one's pretty much right on the money. Then I've got one right at 8,000 as well. So these two, in terms of price action, you can see these are major areas of support and resistance that we haven't retested on this last move up. Let me switch to, I have my Elliott-Wave count on my Coinbase chart. This originally was not my count. I did not come up with this. I want to disclose that now. I also don't want anybody to see, oh, that's the same count as so-and-so, and you did whatever. I always give credit where credit is due. This wasn't my original count. I actually got this from a very good Elliott-Wave chartist. His name is BlackMex on Twitter. I'm going to go ahead and leave a link to his Twitter in the description below. This guy's really good. He's got a Telegram group. He does fantastic analysis. And I think this guy only has like 100 followers. I'm more bearish than anything else. And I couldn't find a bearish count overall that actually worked. And this bearish count that he has works very well. And I did go through and I verified all of this, and I measured all of these out to make sure that these play by the rules. So if you see anything funky here that I didn't catch, definitely call me out on it. Let me know in the comments below that, hey, one of your things doesn't make sense, or hey, it's like right there. How did you fuck that up and miss it? Because again, this is a borrowed count from @BlackMex on Twitter. So credit goes to him. Thank you, sir, for this amazing count on Bitcoin. So in terms of an overall count, basically what's happening here is this entire thing is corrective, right? And the reason why I think this makes sense, to me at least, is because I want you to pay attention to these trend lines, right? These overall trend lines from our high here at 20K and this trend line from our high at 14K, and this kind of zone that's formed here and this big triangle. So these were things that he caught you know, playing into trend lines and combining it with Elliott-Wave theory that I thought was really unique, and I really liked it. And that's the reason why I wanted to borrow this this count from him, is because when doing Elliott-Wave theory, it tends to work out a lot better when you have confluence with other forms of analysis. In this case, price action and trend line. From our all-time high, we had this this major correction here, which he's calling an ABC, and we had an ABCDE, which explains this crazy price movement into our B wave, which I totally get. I think that that's completely valid. One of the other things about this is, oh, well, you know, how can you have a 5-wave sequence into a B? Well, the reason why is because you can have a 553 correction, because that's 13, that's a fib number, and that's actually a completely valid correction, right? So we've got this 5 waves down, 1, 2, 3, 4, 5 into an A, and then we had 5 A, B, C, D, E forming this descending wedge kind of thing into a B, and then we broke down further. Basically, what he's proposing here is we're having a 3, 3, 3, 3, 3. So I think that in terms of Elliott-Wave theory, it is a little questionable with the rules and stuff. It doesn't necessarily break any of the rules, but it is kind of questionable because counts like this are extremely rare, especially when they're counted as ABCDs. But when you take into account this massive this massive triangle that we have, I think that this is totally valid here, especially with these trend lines and everything that we've been testing time and time again. From our main trend line coming down from 20K, we tested it once, we tested it 2, 3, 4 times, 5 times, 6 times, broke above it, and now we're testing our upper trend line from 14K right here. So this is 1, 2, 3 touches, and then we've got this lower trend line for this kind of expanding flat that we've had. 1 touch, 2, 3, 4, 5 touches to complete this, and then we had a reaction here when we reached kind of like this apex. So, you know, way back from here, if you would have drawn this from this candle and just extended it for who knows how long, you would have gotten this point as an apex. To have a reaction here so accurately from this kind of a trend line drawn is absolutely phenomenal. Again, props to BlackMex for this count and these trend lines and stuff that he had on his chart. Absolutely fantastic. And again, I do think that this is probably the most likely thing that will end up happening. Now, obviously, you know, counts only reveal themselves, you know, as they're already completed. So we don't know if this is a C into a D wave yet. We just don't know. Like I just said, this could go higher and then we retrace. But in terms of this count, this also fits confluently with all of the other forms of analysis that I just did, where I'm saying, oh, okay, you know, we should see, you know, levels down here, you know, coming into these levels, you know, anywhere between 6 and, you know, 7,500 and stuff like that. That would make sense for a C wave. If we retrace halfway and we see about 7K here, technically that could complete the E wave, or we could go even deeper over time, maybe see this 886. It would still be higher than our C wave, which is still valid, but that's all the way down at 4,300. I don't think that's going to end up happening. But, you know, seeing like 70% or, you know, anywhere from 50 to 70% somewhere in here, I think is probably the most likely. I don't know if he has the same micro count as me. I didn't get that far into looking at his charts, but after mapping that out, I kind of zoomed in here on a 1 hour chart, and this is pretty much what I came up with, which works. I started with the larger count that he had, and then I kind of worked my way down onto this smaller time frame, and this works. We've got 1, 2, 3, 4, 5. We've got 5 waves into the 3, 5 waves into the 5. They're very clear here. They work. But anyway, that's pretty much what I have in terms of Elliott-Wave. Now, again, it's Elliott-Wave theory. Take all of these things like wave theory, all those things with a grain of salt. They're not things to base your trade decision off of alone. Obviously, they're very subjective, just like trend lines are subjective, like harmonic patterns are subjective. You got to take those things with a grain of salt. But here's the thing about technical. I always trade what the charts tell me, right? Right now, the charts are telling me that we're bearish. If you made it through this entire video, congratulations. If you made it to the end, thank you very much for staying with me this entire time. I hope that you enjoyed this analysis. Again, if you caught things in this video that I did incorrectly, please call me out on it. Just like you, I'm still learning. I trade for my regular income, but by no means am I like a hedge fund manager. I'm not a CFA. I'm not some crazy professional. If I did something wrong that is bugging you, or that's clear that I'm just like a dumbass right now and I can't see because I've been staring at these charts for so long the last 2 days, please let me know in the comments below. I don't want to be putting false information out there. If there is something that's like drastically wrong, I will edit the video, re-upload it, and correct it, so I'm not giving wrong information to the community. I don't want to be that guy. So please call me out on any mistakes that I have in the video, in the comments down below. Please be following me on Twitter for updates like this. I do Bitcoin analysis at least 1 time a week. Normally I do them 2 times a week now. So make sure that you subscribe to the channel. Make sure that you like the video, retweet it, share it with your friends, and just kind of help this channel grow. If you want to help me grow even more, there's even donation links and stuff down there. And I also have a link if you guys are interested in learning more about Elliott-Wave theory. I do have a link in the video description below that you can get an e-copy of this book, which is on my desk at all times. I always have this thing. It's like the Elliott-Wave Bible by Frost and Prechter, Elliott-Wave Principle. Really fantastic book. There's a lot of fantastic information in it, and I have a link in the video description down below that you can actually go and download a free e-copy of this. I guess it's a PDF to your computer for free. I have another link down there. I'm not sure if it's still valid. They were offering a free course valued at $100, taught by Jeffrey himself. He's been with Elliott-Wave International for 25 years. He's a fantastic trader. He's got shit tons of experience. Really, really, really intense guy. Really good teacher as well. And there's a link down below. Hopefully it's still valid. If it's not, I'm sorry. But that course was valued at $100, and it was actually really, really good. It's for free. If you're not already trading on Bybit, I've got a link down there that you can get up to $90 in margin bonus for signing up with my affiliate link. I've got links to my Medium down there, which is a whole bunch of educational articles and stuff like that. And for my next video, I actually am running a poll on Twitter. I might leave this link in the description down below there too. Go and vote for what topic you want me to do educational series on first. So there's a poll on Twitter that I made, and I think the 4 topics were portfolio management, risk management, price action, and something else. I forgot what the other one was. Take care, have a nice day, and happy trading.